And we are live. Good evening, crypto warriors, and welcome back to the Gentlemen of Crypto episode 387. Yes. Today
89.
is it 89?
Yeah.
Stop playing. I was
We're
going
moving
2
so
days.
fast, yeah.
That's what I was trying to get you. Yeah, I appreciate you giving me a moment to fix it.
I forgot for a second too.
Oh, okay.
It's all good.
Good evening, crypto warriors, and welcome back to the Gentlemen of Crypto episode 389. I was going to be 2. That's fair. Today is Friday, April 26th, and I'm King.
And I'm Bitcoin Zay, and we are here to bridge the gap between cryptocurrency and the community Monday through Friday at 3-ish.
At 3-ish. And today we have a lot of great stories I'm sure you've seen in the news. The biggest one is Bitfinex allegedly covering an $850 million loss with those fake Tether funds we kept telling you about for years now. Of course, we'll be talking about Tether hitting back at that claim, claiming that this is untrue. Then, of course, we'll jump right back over to Bitfinex, where it looks like they may have withdrawn $89 million from a cold wallet, basically to calm people down. Then we'll jump over to the stablecoin market, where we have seen $10 million in Paxos stablecoin printed overnight, as well as a few other stablecoin billionaires jumping in the fray. CEO of Japanese finance giant SBI has been appointed as Ripple Labs executive. Insurance broker rolls out proof of insurance blockchain app to U.S. clients. And last but not least, there is right now a groundbreaking Chase Bank lawsuit verdict that could change everything in cryptocurrency as we know it, basically.
Oh, yeah.
But before we begin, did we have a free crypto coin winner from yesterday?
Oh, yeah. No winners from the last couple of days. However, we will have a question of the day today, so stay tuned in to get that question at the end of the show.
There we go. Quick shout outs. We see people starting to slowly load in. What is going on? Clove 71 of those steam monsters.
Oh, yeah.
A. Kent. Tommy Brown, hello. But without further ado, again, this is going to be a pretty interesting show with some of these stories. So let's get started, because it's a strong possibility we'll run over today. And of course, that's the wrong story. I got Dino Diamond face on there. But yeah, as we said, top story: Bitfinex allegedly covers $850 million loss with Tether funds. Shout out again.
Let's go ahead and give it a shout out. Finally, we got it over.
Listen,
just get it over with. We knew it was fractional.
We have been saying this literally since 2016, 2000. Like literally, we have been telling people Tether was bad news since I tried to sign up for Tether. I believe it was about February of 2017. I wasn't even getting my approval until like probably May, like 4 or 5, 6 months later, May or June. And then they never even allowed me to actually buy Tether. They just had all my information frozen on an account, which it probably still is, including my social security number. And that's when I already realized something's wrong with Tether as well as Bitfinex.
Yep.
But it looks like the New York Attorney General actually agreed. The New York Attorney General's office has alleged that crypto exchange Bitfinex lost $850 million and subsequently used funds from affiliated stablecoin operator Tether to secretly cover the shortfall, according to an announcement published on April 25th. Attorney General Letitia James revealed that her office obtained a court filing alleging that iFinex Incorporated, the operator of Bitfinex, Tether Limited, and their associate entities were in violation of New York law in connection with activities that may have defrauded New York-based crypto investors. Before Bitcoin Zay jumps into this, I will say in this story, I already believe the New York Attorney General. I'll tell you why. Because the same thing Bitfinex is doing with Tether is the same thing the United States government did with banks.
Fractional reserve, baby.
This is the name of the game, and New York knows it. New York isn't upset that Tether lost his money and their customers and their crypto investors. Their crypto investors, of course, being some of these New York Wall Street people. They're, of course, mad that they, A, didn't get paid, and B, they're happy that they can crush the competition finally.
Oh, yeah.
What is going on with Bitfinex, the New York Attorney General's office?
Absolutely. Incredible news coming out simply because, like we said, we've been saying it for a few years now. And on top of what has come out from Tether and from Bitfinex, we're starting to see exactly how fractional reserve works, how banking works. For those of you who didn't know but have gotten into crypto or didn't believe it, this is what it is. They did audit Tether last June and said that they had $1 for all the coins available. However, if they use printed tethers to cover losses at Bitfinex, that is simply not okay. And over time, if this is happening at other exchanges, this is actually good because this cleans it up. This actually shows people, hey, if we get out these people or these companies that are messing around and don't have the up and up, then we can do it for other ones as well. There are a few things I do want to throw in there. One, New York did more for searching the capital for these companies than they have for all of the banks combined.
Right.
They have never actually dug that deep.
I mean, come on.
Into the
Do you even need to dig deep for a bank to see the same story?
Exactly.
I could probably go to New York. Give me 30 minutes. I'll find you a story like this in New York.
JP Morgan just had this story with the silver, where they were manipulating silver markets. Then from a banking standpoint, I mean, good gracious, how much do you have to do? So I think New York, they're hypocrites for this because they're going hard at crypto companies. This is a chance for them to take out the competition. And by competition, I mean other stable coins, which we'll discuss, having it in good with New York and then others who don't. We have talked about Tether being sort of the lone wolf as far as having their own funds backing them. You know, every other stable coin has some corporation backing it, some, you know, big investor. Tether's kind of like, no, we're just going to do our own thing. We'll audit ourselves.
Because we don't have real money.
We don't have real money. Who cares? And with Bitfinex, with that partnership, if Bitfinex lost money, they could cover the losses until they gained it back, and then you can go from there. So, of course, that's not legal, but New York is definitely putting their foot down on this news.
Yeah, I'm glad. Like, for one, let's point that out. New York isn't some superhero on a cape, all right? They're another villain just saying that, hey, the enemy of my enemy is, or, you know, what's it called?
The enemy of my enemy is my friend.
Exactly. It's one of those things. New York government regulators, we know they are in bed with Wall Street bankers. It's crazy that even the citizens of New York have not literally, as I always say, tar and feather these people. I mean, that is incredible to me.
Man, they tried that weak-ass Occupy Wall Street.
Right, and they got pepper sprayed to hell.
Nobody in tents eating cheese sandwiches is going to influence Wall Street.
I mean, it was like Fire Fest on Wall Street. But anyway, so
take a shower.
It's not like, you know, we're all giddy about this story because, you know, it's coming from a regulator or, you know, attorney general. No, they're just as dirty as the next Wall Street person. Yep. However, I do trust this information, whether it's right or wrong, because, again, it could be wrong because, hey, who's going to sue the Attorney General of New York, right? Like,
ain't nobody suing Letitia.
Right. It don't sound like it to me. So it's one of those things where, you know, this is definitely a stand up for Wall Street. It's a thing for the government to put their foot down on crypto companies and cryptocurrency industry in general. But at the same time, well-deserved for Bitfinex. If this is true, this is something we've been saying for a while, as we stated. You mentioned the audit that Tether actually did. If you remember, when Tether initially did that audit, they fired their third-party auditor. Or either they fired them or they quit or a mixture of both, because that third-party auditor basically came back with results that didn't seem to please Tether. So they fired the first one or two auditors they had,
and then the next one,
they did it themselves.
Yeah.
And then that's when they say, hey, everything's good, you trust us or you don't trust us. But as James, Attorney General Letitia James, has stated, our investigation has determined that the operators of the Bitfinex trading platform, who also control the Tether virtual currency. So she's even going as far as saying that they not only operate Bitfinex, but they actually control Tether, something we have said allegedly multiple times, have engaged in a cover-up to hide the apparent loss of $850 million of commingled client and corporate funds. Again, they don't care about that client. They're talking about that corporate funds that went missing. New York State has led the way in requiring virtual currency businesses to operate according to the law, the one that they make every Wednesday morning, Tuesday night when you sleep. And we will continue to stand up for investors and seek justice on their behalf when misled or cheated by any of these companies. Again,
Jesus Christ, that is terrible virtue signaling.
They're really, they care about the corporate funds. B, they're standing up for the corporations again. It's not about these small mom and pops. But what's crazy is Bitfinex is the only person. We just went through a crazy bear market where we saw first we saw the bull run, $1,000, really, $500 Bitcoin to 20,000 all in a matter of 15, 16 months. And then it goes down to 3,000. You are crazy if you think Bitfinex is the only exchange that lost $850 million. I would dare to say almost every exchange lost close to $500 million. So for this to be the only one, of course, that's kind of crazy. But again, this is the basis of the story. You can see on this article, the comments, there's plenty of comments. The first comment by this guy, John Doe, says yawn. Because that's what people in the crypto community really feel like really? We didn't know this?
And this is encouraging, actually, for those of you who are traders out there looking at the price. If you want to start to see the signals for the end of a bear market, news this big didn't push the price below 5,000. So you should be really encouraged at this point. Because when certain news would come out during the bear market, that would just be the excuse for what was already going to happen.
Right.
For those of you who know, once the news comes out, it's too late. The trade should have been made before the news came out, and then you can actually see those gains. But in the bear market, we kept seeing drops of 1,000, drops of 800, drops of 1,200. every time there was some sort of bad news that came out, this really didn't do anything. There was an initial,
that's a good point.
There was an initial drop, but
Price
it didn't go below 5,000.
I'll say still below 5,000 with news like this.
Yeah, exactly. Like, this is encouraging. This is actually makes it very bullish, and it put people on notice that they're actually looking deep into these companies. So you know what you're dealing with New York.
And speaking of, I mean, that's a great point. Clearly this is a floor as of now. But you got to remember, we talk about these percentage swings, people. When we were at 3,000, 7,000 seemed like a long time away. People were like, hey, let's get back up to 4,200, 4,600. Now we're at over 5,000. 7,000 is not that far away from a percentage swing. And then you talk about from 7 to 10, smaller, 10 to 12. You get where I'm going? So it's going to happen quick. I mean, literally, we've seen in the last month, 3,000 to 5,200. So it's going to happen quick. Let's get to some comments, great comments before we go to the next part of the story. What's going on, A. Kent, Madam Crypto Ola, Ryan Cooper, Jizzy Matt, great comment. How dare you fractional reserve without a banking license? That's what it's really about.
That's what it's always
You all don't have a banking license? You think you're going to steal and not pay us?
Yeah.
Special Investigator Attorney General Letitia James?
Yeah.
What?
You're not getting up on Letitia.
Right. Sergeant Crypto PFC Will says straight facts, bro. Appreciate it. M. Gordeski, what's going on? M. Gordeski also said West Side. That's what's up. Where you located at, M? Let's see. PFC Will says it's all about positioning. The gate guards can do a proxy and using the long arm of law. Of course.
Always been.
You already know.
Yep.
Jizzy Matt, great comment. Definitely want to highlight this. Meanwhile, the Fed refuses to be audited. That is the craziest part of all of this.
Yeah.
How is the New York Attorney General going to even look at a crypto company for anything?
We missing 20 trillion.
When we're missing 21 trillion.
21 trillion.
We're missing $21 trillion, and we have not audited a private company called the Federal Reserve that prints fake money to the U.S. government that we use. We haven't audited them yet. We don't know how much we know how much they have is nothing, or is negative 21 trillion. But they don't even get audited, and these same regulators are jumping over to the crypto market. Yeah. Molasses and feather, okay? Molasses and feather, people. Look, the way I talk, I could never go to New York again.
Yeah, I was saying. I mean, I don't want to have to tar and feather a black woman, but I might have to give you a wedgie at least.
Hilarious. All right, second part of this story. Bitfinex withdraws $89 million from code. While actually, pardon me, people, I skipped one. But it's okay. We're gonna have to get to that anyway. Tether hits back at claims its reserves were used to cover $850 million loss at Bitfinex. That popped up today right after they got the fist going off the desk. This guy's angry. But it looks like stablecoin operator Tether has already responded, 24 hours later, to allegations that its funds were used to cover and that loss we just talked about. They issued a statement today claiming that the New York Attorney General's office are, quote, riddled with false assertions. Tether, you guys aren't going to be able to go back to New York either. No. Again, we talked about Letitia James accusing Tether. What's Tether saying about all this?
Well, Tether, they are saying that both Bitfinex and Tether are financially strong, full stop. And both Bitfinex and Tether are committed to fighting this gross overreach by the New York Attorney General's office against companies that are good corporate citizens and strong supporters of law enforcement. So usually whenever somebody puts gross overreach or gross
all these buzzwords, talking about police, law enforcement, we got to go to the police already.
Exactly, yeah. That already signals to me that they are really perturbed by this decision by New York. However, the claims that they made will have to go to court. We'll have to see how it goes. And they did call themselves corporate citizens, which is always kind of unstable to me. Because if you remember back in 2008, they actually pushed for legislation to consider corporations people, so that the tax law could be a little different and they could get some good benefits. So this is them basically coming out and say, hey, we're trying to be one of the good old boys too. Why don't you let us into the club? And New York is saying, nope, you're not allowed. You won't come in under our umbrella. That's basically what's going on here. And they have to defend themselves. So this was a pretty easy defense, but we'll see in court.
Now, Tether's statement, also released by Bitfinex, is pretty interesting. It says here, as you can see on YouTube, the New York Attorney General's court filings were written in bad faith and are riddled with false assertions, including as to a purported $850 million loss, in quotes, at crypto capital. On the contrary, we have been informed that these crypto capital amounts are not lost, but have been, in fact, seized and safeguarded. We are and have been actively working to exercise our rights and remedies to get those funds released. That joint statement also claims the New York Attorney General's office, quote, seems to be intent on undermining efforts end quote, to get the funds released and warned that this will ultimately be the detriment of their customers. Now, this part I can believe in again.
Yeah.
Don't get me wrong. Again, I said from the beginning, New York Attorney General, they're not wearing a cape, okay? They're just another villain being a villain. So who knows who's lying? And according to our history, the U.S. government has a great history of lies. Like every day we got a new lie we put out there.
Yeah.
I think I just heard today on NPR that somebody in government was talking about a possible coup or something. I don't know. It's craziness, right?
We be lying, bro.
We be lying. You are funny. So I don't know. But this is something we've actually talked about on the show. I forgot the mafia guy, Sam Gravano or whatever.
Yeah, Sammy the Bull.
Sammy the Bull we had on here with that ABC interview, and he was talking about how they can use, with the government's help, and they can use investigations and things to slow down truckers to take over basically the trucking market. And that's kind of the same thing here. We talk about cryptocurrency and these licenses and regulations. This could be true. The government of the United States could have actually seized $850 million from Bitfinex. And then all of a sudden, to actually cover those losses of a seizure, they could have said, yeah, we actually are going to use Tether whether they do or not. And then the report could have came out, well, hey, we know for a fact they're using Tether because we took their money, but we're not going to tell you we took their money. Yeah. So, Tether and Bitfinex is over here saying, hey, you guys are the ones who have our money, and you're trying to bleed us out and have customers leave so our company can go under. I think that could be true as well.
I can't wait to see how this plays out.
Because the government has been undermining efforts in the crypto community. Private companies, Wall Street, have been undermining efforts. And we've already seen the likes of Google, Facebook, Goldman Sachs, and all these type of companies undermining cryptocurrency businesses and efforts. So this actually could be the thing. If it is, this is the stuff where I hope to see the government get sued. I hope to see these people get fired because, again, we don't know either way, but hey, I'll tell you what, Tether been Teflon Don thus far as well as Bitfinex.
Yeah, and they don't like that. And
they claim to have their stuff together. So if their stuff really is together and they're not cheating nobody, and maybe it's just a bad support team or bad businesses, whatever, because this is new in crypto, everybody's learning. If this is all true on their end and New York is wrong and it's something nefarious happening behind the scenes, I hope we find out, because they are literally taking a 180 approach to this. They're not, they're like, hey, the money's gone because you took it.
Yeah.
That's a big part of the story if this is true. Hey, New York, Letitia, why you ain't tell us that part?
Hey, in New York, like I said, there may just be some people from, like I said, basically crypto right now is DMX and Nas driving in belly,
hilarious.
And the U.S. government is eating a banana. Talking about, I don't like that. I don't like that. That's basically what's going on right now.
A lot of people are going to miss that. Look at the movie Belly.
Watch Belly.
Yeah, you understand.
Terrible movie. Great.
Belly was a great movie. What are we talking about?
Great cinematography.
All right, that's facts.
But yeah.
Vowing to challenge the court filings, the statement also added, both Bitfinex and Tether are financially strong, full stop. And both Bitfinex and Tether are committed to fighting this gross overreach by the New York Attorney General office against companies that are good corporate citizens. Okay, you did say that one already. Yep. Pardon me. This is crazy.
About to drop a diamond. This saga has to continue further, because now that this has happened, people have to make up for losses. And it looks like Bitfinex printed some money out to make up for his losses.
All right, Bitfinex withdraws $89 million from Cold Wallet as users signal exodus over legal debacle. Before you get into this, Bitcoin's able to cover it. Just at the title, here's the issue, people. They're talking about users signaling an exodus. For one, stop leaving all your money on exchanges. If you have a lot of money, stop. So it shouldn't be a mass exodus when we find out exchanges are doing things like this, because I guarantee they're not the only ones. And second thing is, as we just covered in that last story, I think it's unfair for users to do some type of mass exodus over a legal thing, because again, these regulators lie, people. They are like, especially in New York. Especially in New York. They are working with Wall Street. Don't get me wrong. It is very hard not to. You're talking about a multi-billion, probably $1 trillion industry with Wall Street, who are literally have no qualms or quarrels about paying off regulators, paying off politicians, getting people into office. Like, that happens. That is real. So I wouldn't necessarily just leave an exchange because the regulator said this. That is how we get all this regulation right now. Everybody's listening to the government, even though they are clearly doing things like not auditing the Federal Reserve. That actually matters a lot more than auditing a crypto company. But what is going on here when Bitfinex now? They all of a sudden did a magic trick, put out $90 million. What's happening?
Hey man, well, in their cold wallet, they actually have funds that they have stored, over the years, and they pulled out 90 million to try and, I guess, sustain the pulling out of money from this exchange.
So people are pulling out money.
Oh yeah, there was one big notable one United Kingdom entrepreneur Alistair Milne. He withdrew at least $1 million himself, supposedly. And there are others who have. If you look at Well Alerts, which you can get them on Twitter, you can actually see the money being pulled out. They pulled out Bitcoin, Ether, and even some Maker as far as cryptocurrencies to take care of this loss. And the best part about them doing this is the time period, because as soon as this news comes out, they have to use 90 million to recover. And then of course you can say to yourself, well, I mean, it may have been seized, but the fact that you need 90 million to recover, there may be some line on their end too. That's why I said we have to wait. We really
Where's the money? Where is the money?
Where is the money? Yeah.
That's all we want to know.
When they took out this 90 million and had to cover their losses, people were like, oh, okay, yeah, well, this is really bad.
Right.
But a lot of people are leaving the exchange just because they don't even want to have to deal with what might come.
That's the part, because they seize the entire exchange, then your money is on there. Okay, I get that.
Who wants to have $1 million sitting on it? Who has $1 million sitting on the exchange at this point? But there are a few.
UK guy.
Yeah.
Well, the good news out of this story is, first, we know that whether you agree with them or not, we know Bitfinex and Tether aren't a bunch of bad guys, because if they really and truly were bad or had this sophisticated criminal enterprise like some of these companies do, I'm sure people like this UK guy, they'll just give them a call and be like, yeah, you're not putting your money out. And don't try that again, okay?
Oh, yeah.
But on to the next story, just as big. It goes with all this. In light of all this, it looks like competition is biting back. $10 million in Paxos stablecoins have been printed overnight following Tether allegations.
Oh, yeah.
Again, the craziness of this, people.
Some fresh stablecoin.
This is why centralized exchanges are not good. They are banks. This is why stablecoins are not good, because they're operating like the fake fiat money that we actually have. How did Paxos just all of a sudden wake up at midnight and print $10 million of stablecoins? I'm confused on how this works.
They got that text from the New York AG.
Seriously. Yeah, for real. They probably did. So what's going on here?
Oh, yeah. Well, $10 million was printed by Paxos following this news, and what comes after that basically is Paxos is basically kicking them while they're down. As soon as Tether news came out, not only did Paxos print 10 million, but Gemini actually put out a media tweet or a media thing saying, hey, we're actually regulated by the people that took down Tether, so you don't have to worry about that with Gemini. And then Paxos comes and prints 10 million. This is basic business right here, where when you see a company going down, make sure you really stick it to them. Honestly, this is the only way that these stable coins will survive going forward, because Tether, everybody was using Tether. I mean, it was the biggest thing being used. It was used on a lot of exchanges, and a lot of exchanges hold their funds in Tether as well. So this was maybe the only way to get them knocked down a notch. I don't think they'll go away completely, but they did get knocked down a notch, and this is why you have somebody have 10 million stable coins just put out, instantly. Literally press of a button, let's go. And I'm sure Gemini has something similar coming with that media. So
and to me, this is why I don't trust it, though. I mean, you're like, Paxos over here, or Paxos, excuse me, I said Paxos like the website. Two different companies, people. Paxos is over here printing $10 million of stable coins, each valued at $1, and you want me to believe that. All right, if you're going to airdrop me something free, I'll cash them out, whatever, but I'm not holding on to these. You know what I mean?
Yeah.
I don't know. Maybe the company has it and they're trying to back it, but this is why we talk about those derivatives on top of derivatives. There's no reason for an exchange to be holding almost $1 billion. There's no reason for a stable coin to be printing $10 million overnight. Like this isn't crypto. This is crypto right here, people. Bitcoin. And there's some other coins, utility coins and stuff that are becoming good, but it's literally that simple. It's that simple. You can't $1 billion in Bitcoin can't just disappear. You can't print off 10 million Bitcoins overnight. This doesn't happen. So these, to me, all these people are showing the flaws in these basically new industries they're trying to develop within the community.
Oh yeah. And I mean, if you think about stable coins, I've talked to people who their first time hearing about cryptocurrency, they like it, and then you tell them about stable coins and they're like, so basically that's just my money in digital, so why do we need it? And that's exactly what we've been saying. We don't actually need it, but they are here. They are being used, people like to use it as an on-ramp into crypto space, but this is exactly what bankers want. They want you to use that fractional reserve money.
So I want to know, like, it's one of those things where Paxos, exactly. I like Tommy Brown said, you should have to prove you had the funds before you print, because I mean, hey, 10 million a day, whoa, it's work. Why not 30 million tomorrow? 40 million next day. Throw some marketing out there. Make sure everybody believes this is the next big thing, right? But yeah, we'll be continuing to follow Bitfinex story. I'm sure by Monday of next week there'll be more information come out. Possibly Tuesday, because as crazy as all this is, we also know the Attorney General and the rest of New York folks don't work on the weekends because it's a government position, people. So how much could you really even trust it?
Oh, yeah.
CEO of Japanese finance giant SBI has been appointed as Ripple Labs executive. People, this is huge.
Oh, yeah.
When I first read the title of this story, I really read CEO of whatever Wall Street company has been appointed as a chair member of the Treasury or the chair member of another private company of the SEC or something. This is crazy. But Yoshitaka Kitao, CEO, I think I did pretty good on
that.
Yoshitaka Kitao. I did, you know what? On the back. CEO and representative director of Japanese financial services giant SBI Holdings, which we spoke about many times. They're doing exchanges. They're trying to do stable coins. They're doing everything. He's been appointed as an executive of Ripple Labs Incorporated. As previously reported, SBI Holdings is an active partner of Ripple via their joint venture, SBI Ripple Asia, which was established to promote the use of Ripple in Asia financial markets. This is big and crazy, people.
Yeah.
This is literally the bankers and Ripple just trying to push more Ripple out.
Yeah, I mean, this past January, SBI actually published a 9-month financial report which identified the implementation of Ripple as part of its strategy, as well as R3 Quarter, which is, kind of under the rug right now. But the disputes they've had, with other companies and all that with Ripple, that's kind of going away because Ripple is basically positioning themselves to work with straight banks. They're, we love you, Cashta, but Ripple's pretty corny. But as a currency for banks or for big clients, this will be used simply because the insiders already have Ripple. Like SBI already probably owns, a bunch of Ripple, and Ripple was reportedly they've sold over 100 or close to $100 million worth of Ripple over the past few months, basically leaving everybody who owns it with the bag.
That's what I'm laughing about right now.
They just left everybody who owns Ripple with the bag. So shout out to you all still.
Brad Garland House like, I want this. I want this. I'm trying to be I can't be the 5th richest man in the world with Ripple. I need something else.
That's why they're giving it away to Ellen and Ashton Kutcher and everybody else.
Y'all can have $100 million of this.
Who cares? Yeah, but this CEO got appointed. This is not surprising because they're going to use Ripple. So why not have person who's going to use Ripple be the chair of Ripple Labs? So this is pretty Americanish, I would say, because we have seen people from Wall Street go to SEC, go back to Wall Street, go to FINRA or whatever. We've seen that plenty of times. So not surprising, but definitely something to watch out for with Ripple.
And last but not least, a very important piece of the story I want to point out is this here in the middle. You see Cointelegraph Japan also writes that Kitao believes that the United States regulators won't be able to judge where Ripple is a security for the next 3 to 5 years. For one, that's also the time limit we have given everybody. I think we said about a couple years ago when we were like, hey, while we don't believe in Ripple is good trading, at least for the next few years. Yeah. So this guy's saying the same thing. And secondly, you don't have a person at SBI, one of the biggest, finance giants of all of Japan. You don't have their CEO join Ripple and not know his due diligence of, maybe I joined today and tomorrow is security about the United States. I'm a CEO of a big financial institution in Japan. Maybe I call up some people in the United States on Wall Street and figure out what's going to happen. Yeah. Maybe I pay some people and tell them, hey, not saying you can't do this, just give me a little bit of time to make my money back.
Yeah.
But for a CEO, that's like Dino Diamond. Think about JP Morgan Chase CEO. What's his first name? I can't remember. I call him Dino Diamond all the time.
Jamie.
Jamie the Dino Diamond. Think about if Jamie Dimon were to come out at one of these conferences and say, I am fairly certain, Ripple won't be a security for the next 3 to 5 years.
How would you know that?
How would you know? You know the right people to talk to be fairly certain. Yeah. So I'm pretty sure this guy Kitao knows the right people to talk to also to be fairly certain that regulators won't be able to judge this for the next 3 to 5 years or until he gets his money and get right back out of it. So as we said, when we're talking about Ripple, even though a lot of people are holding the bag, they're selling it off and all that good stuff, it's still a good tradable asset. I think 5 years is a far end because we already kind of gave our estimation a couple years ago. Next 3 years is good for trading people, but you be careful.
Be careful.
You saw how Bitfinex happened. what, 1 in the morning?
All at once.
2 a.m.? 3, were you awake when it happened?
Yeah,
or you just
exactly.
woke up and saw your money gone, right?
Yep.
So just be careful. All right, last couple of stories. Insurance broker Marsh rolls out proof of insurance blockchain app to U.S. clients. Cool.
Yeah.
All right, what's going on here?
Oh, yeah. Well, Canada-based global insurance broker Marsh, they are rolling out their proof of insurance blockchain platform in America. They first launched a proof of concept back in April of 2018, and their platform will give more certainty about insurance coverage as well as speed up business processes. Thank goodness. We've definitely seen the insurance company go from, very, very slow to, okay, it's all right now, you can do it pretty fast, to hopefully light speed, where you can basically just sign up, acquire certificates, and the blockchain-powered digital application will move a lot quicker as well. The app will initially be available to a select group of Marsh clients, of course, and they'll be able to search, view, issue, and reissue certificates. After they do the initial rollout in late 2019, it'll be available to everyone. So they're using the Hyperledger Fabric, which we've talked about before from IBM, and this partnership will allow them to create different apps like this. Insurance, we've seen it for Walmart when they're tracking goods and foods. We've seen in France they're doing the same thing with issuance of insurance. So blockchain technology is definitely moving forward. A shout out to this company Marsh for being leaders.
Get this insurance going.
Oh yeah, stop being scared and move on to the blockchain.
Ryan Cooper said Ripple is dirt weed. That is hilarious, honestly.
No, yeah, that was great analysis there.
All right, last but certainly not least, again, this is as the title says, groundbreaking, people. Groundbreaking Chase Bank lawsuit verdict could see New York federal judge rule crypto is cash. If a New York federal judge rules crypto is cash, I guarantee other regulators, politicians, and Wall Street people will do what all you citizens in New York are scared to do. They are going to get some molasses or some hot tar and throw it all on that judge with feathers as he walks out of the courtroom or she walks out of the courtroom.
Yep.
What is going on with this story? Why is this so groundbreaking? And how do we even get to the point where now it might be ruled cash, or what else could it be ruled as? What happens?
Yeah, exactly. And see, they found themselves in a conundrum at this point because they have a choice. We all know J.P. Morgan Chase works with New York regulators. So if a New York judge,
that's illegal. We would never. Our government would never do that.
Illegal, schmalegal. Who cares? They don't care with New York. So you have on one hand where if Chase is found not guilty, then that means the judge would have had to say crypto is cash. But that will open up an entire Pandora's box where if a New York judge says crypto is cash, that legitimizes it, even though J.P. Morgan will win the case. However, the people who are actually suing Chase are saying that crypto are goods that you can purchase. It is not cash; it's actually goods that you can purchase.
So wait, Chase is getting sued by people.
They're getting sued by people because Chase said that crypto is cash,
right?
So they could charge extra fees when you bought crypto with your credit card.
Oh.
They were charging them fees as a cash advance.
You dirty dogs!
Because they kept saying crypto is cash. However, if crypto is found to be goods, the people who actually sued them would win. Crypto would be known as goods, and they wouldn't be able to charge those fees. However, on
big lawsuit then, so they would lose a lot of money. A lot of money.
This
is a movie. That's why I keep saying it.
Yep. And if people wanted to pay with credit cards, they can't do the cash advance at all.
Right.
Which is crazy anyway, because who considers buying crypto a cash advance? I mean, only bankers who want to, basically take the fees.
Right.
And once they take the fees, it's not like, they just give it right back to you if you complain. You're gonna have to wait years or maybe a while to get those fees back and to get a return. And basically, they want you to forget about it or run out of money. And that's what it seems like here. Because if the judge says crypto is cash, I can tell you right now, a New York federal judge saying crypto is cash, Pandora's box is open because that's a precedent.
Price is going up.
Hey, that's the precedent for the future. So we have they have a conundrum, but I think we win either way in the crypto community because they have to legitimize it at this point, and because it's J.P. Morgan Chase, Jamie Dimon can't avoid it. They're going to have to bring it up. He's going to have to go to court for this. So good to see there that we can finally win no matter which way it goes, because the legitimizing crypto is important.
Well, this kind of goes on something you have been saying for a very long time, and that's they're going to eat themselves.
They're going to eat
themselves. This is what we talk about, people. The war is already over. This is just the dirty part, the little battles. But this is literally eating themselves. Chase Bank, being banks, being dirty, being wanting to overcharge. As you say, they decided to say, hey, we're going to charge extra fees for you buying crypto since it's cash. Then people are going to say, well, we're going to sue you for that then. They go to court. Judge says Chase, what Dino Diamond? Do you realize what you just done?
Yeah.
If I rule this as cash and I give you the win, as you always want to win, and not get a big lawsuit, then now crypto's cash.
Yeah. And
But
that's a precedent that you have to stick with in federal court, people, not state.
Woo-wee.
This is a federal case.
This
will definitely be
huge,
a big precedent.
people. You know, you can see here the lead plaintiff, and this was even crazy about how Chase got caught up. This is what we're talking about, people. It's like the quote where it's like, for the one of a nail, or, you know, for the one of a nail, you didn't have the horseshoe. For the one of a horseshoe, you didn't have a horse. You didn't have the message. The war was lost because the message wasn't delivered. The lead plaintiff in this lawsuit, Brady Tucker, says Chase charged him $143.30 in fees and $20.61 in surprise interest charges for 5 crypto transactions he did between January and February. So literally, because you greedy people wanted to charge, I know, you know what I wanted to say. I'm just letting it go. Because you wanted to charge $165 of fees and interest, now your entire thing is about to go down in flames. Like, that is eating yourself I ever saw. Like, how ridiculous is that? Over $165, you're about to lose it all? Yeah. Or the judge is like, because literally the judge either says, sorry, Chase, even though you're the big bank on the block, we're about to have to embarrass you and you're going to lose to save everybody. Or will Chase Influence be like, we're not losing another case this year, or at least not before the quarter. I mean, you know what I mean? Not before the end of the quarter. Like, we're not losing another case. So again, this is a win-win for crypto. This is huge. Look at Jay. There's nothing more that I love seeing than people like this testifying.
Stressed out. Talking about blockchain and Bitcoin.
Listen, it's actually funny because you already know majority of the words coming out of their mouth are going to be lies. It looks like this thing's taking some time to load up. Again, this is on CNBC TV. Jamie Dimon is testifying. Again, people, great day in crypto. We got exchanges getting regulated, I guess. You got the government getting regulated. You got big banks going under fire. Literally all these big institutions that did not want to be a part of the community, play the right way. You know, everyone wins. It's all coming back to bite them now, so it's pretty interesting.
Let a bunch of dudes in hoodies and dog memes pull you into the crypto fray. Congratulations, bankers. They kept thinking they were above us, and I kept trying to remind them, these people will look, talk, act a certain way, but they're smarter than you. Right. They're going to make it where you have to get involved. Now the bankers are having to get involved. Crypto people are smarter than you. They just don't have the money backing it. As soon as your money moves towards the crypto space, which is what's happening right now, you're going to eat yourself because you're going to try and do what you did before, and that doesn't work in the year of our Lord 2019.
And one thing to piggyback on, as you said, this is a federal case. This is going to be huge. And the reason, again, it's not just Chase on the fire. We see here similar lawsuits over these cash advance fees, which they're not telling people about. For crypto purchases were also filed against Bank of America in California and State Farm Bank in Illinois. Could this be the judge's decision that takes down the banking infrastructure as we see it? Literally, if the judge comes out and says crypto is cash, all these banks win your lawsuits, then you're good to go, even though they probably won't. If they come back and say crypto is goods, then these banks owe a lot of people a lot of money.
A lot of money.
Wow. I might go ahead and swipe a card today just to get some of this back too.
Oh, yeah.
But here we go. Yeah.
Absolutely.
And that was your week in crypto right there.
Oh, man. That was great.
For the free crypto coin, what are we doing today?
Oh, yeah. So for the free crypto coin, we discussed Bitfinex. We discussed Tether. We like to hear what the community has to say about it. Do you think it's good long term? Do you think it's bad? Let us know what you think. Put that crypto coin address, and you will receive those funds next week.
For sure.
Oh, yeah.
And Tyler White, we see your message. Email us at KRBE, KRBE at KRBEcrypto.com, and we will get back to you.
Oh, yeah.
Yep, PFC will, so they should have settled out of court. Shake my head. Hey, there you go. That's what happens when you greedy, people. It will come back to bite you.
Absolutely.
But here we have it. Other than that, people, have a happy Friday. We will see you next week. Got anything?
That's all for me.
Cheers.
Have a good one.